Hello everyone, welcome for joining us for the webinars tonight. So for our topics tonight, we are going to talk about the Nonfarm payroll. So after for tonight's webinar, I hope you guys will learn about what is the Nonfarm payroll and then how can you utilize the data from the Nonfarm payroll to enhance your trading strategy. And while we are waiting for more people to join us, feel free to type in the chat box if you have any questions. I will try my best to answer all of you and all of the related trading questions. And then also make sure you can hear my voice. If any issue, please let me know also. So I think we are going to wait for another 30 minutes for more people to join us. Once again, thank you so much for supporting us. So hello Ron and then hello Nicholas. Now we still have another 12 minutes. And while we're waiting for others, if any questions, you can feel free to type in the chat box. I will try my best to answer all of you guys. Hello from Josh. Good morning to you. All right, while we are waiting for more people to join us and you guys don't have any questions, then maybe I will do some quick analysis for you guys to let you guys understand on recent markets movement before we start our NFU webinar later. So we are going to wait for another 9 minutes, but before that, just do some quick summary and small update for you guys about the market movement recently. So the first thing that we are going to talk about should be on the dollar market, as we can notice that even though we do have the non-farm payroll that is going to release later tonight, but a lot of investors start to expecting that there will be chances for the non-farm payroll might be provide a quite pessimistic reading. That's why several investors start to sell off the dollar, and then this lead to a significant drop for the dollar recently. And then not only the pessimistic outlook for the NFP tonight, we also noticed that currently the Federal Reserve member, especially Fed Chair Jerome Powell, he also provide a quite dovish statement saying that there will be chances for the Federal Reserve to consider cut their interest rates in 2024. This is the main reason that caused the dollar to drop aggressively recently, and then which lead to a higher prices for the gold market. Later, after the non-farm payroll data sessions finished, I will also guide you on how can we draw another level. Because as for now, right, you can notice overall trends for the gold already hit all-time high. And then where can we find another level of the resistance level? And then how you know what is a good resistance level? Later, I will also guide you guys on the new trading indicator, which is the Fibonacci expansions. Later, after the Fibonacci expansions was drawn, everything, another new resistance level for the gold should be formed. Let me show you one of the example. Then after that, I will teach you how you draw it. You can notice that after you draw the Fibonacci expansions, right, the first resistance level should be around here. Then break out again. This is a second resistance level. So Fibonacci expansions usually start to solve the problem on how can you find the products, especially the products movement, especially after they hit their record high. Okay, and then the next thing that we can focus on recent market should be on the Japanese yen market. As you can notice, right, the overall trends for the Japan's market recently are quite pessimistic. You can notice on the USD JPY are continue to drop aggressively. So what is the reason that caused USD JPY drop? Because this is one of the major movement of the pair in this week. So what caused the USD JPY to drop aggressively? We need to move back towards some of the major fundamental that happens in the Japan's market. So you can notice recently, we do notice a lot of Bank of Japan's member, they're actually coming out and say some quite hawkish statement. They mentions that currently the overall inflation as well as economic recovery in Japan already starts to become better and better as for now. And then as for now, right, there will be chances for the Bank of Japan to consider maybe even shift their monetary policy from expansionary monetary policy towards tightening monetary policy. To put in a simple term is there will be chances for the Bank of Japan to consider increase their interest rates. You can notice recently Bank of Japan keep maintaining their interest rates on negative zone, negative territory, which is like negative 0.25%. This region, this negative interest rate environment is what we call the quantitative easing program. It's already been very, very long, since very, very long. But as for now, since the Japan economy has started to experience a great recovery, the Bank of Japan have been mentioned that there will be chances for the Bank of Japan to increase the interest rates. So for forex trader, you guys should be quite familiar with the interest rates movement. Interest rates, how the interest rate decisions affects the forex movement. To put in a simple terms for new joiner, normally if the central bank decide to increase the interest rates, the currency will be going up one. But if the central bank decide to lower down the interest rates, this is the thing that can reduce the appeal or the demands for the currency. Okay, so because of that, recently, Bank of Japan are actually mentioned that they will have chances to increase their interest rates to tighten their monetary policy. A lot of investors start to have confidence towards Japanese yen market. That's why they shift their portfolio into Japan and US in yen market. The reason why is then this is the reason why USD JPY dropped because of the chances for the increase of interest rates from BOJ, Japanese yen are going up. So when Japanese yen going up, the pairing of USD JPY to drop back. So this is the two big fundamentals that are supporting the trends for the USD JPY as for now. First fundamental is from the US side because US economics outlook as for now have shifted to more pessimistic outlook. So dollar drop, and then because of Bank of Japan want to increase the interest rates, this is the reason why USD JPY go up. this is the reason why JPY go up, which lead to a drop in USD JPY. So this is one of the hottest trade of the day in this week. Just a small fundamental updates for you guys. Then the next big movement should be maintained on the BTC market. You can notice overall trends for the BTC are increased aggressively. So just a short update for you guys of what happens to BTC market recently. On fundamental wise, the fundamental reason that caused a Bitcoin increase aggressively is because of, if you notice on the news, you do notice that the SEC from US, the US SEC are actually approved Bitcoins to become one of the major traded ETF. When they approve it, right, it means, right, there will be chances for more institutional investor enter the crypto market, which lead to a significant demand for the BTC. But of course, it's not 100% is very, very good for the BTC market, because when more and more institutional investors able to enter the Bitcoin market, we can expect the risk should be higher because there are more players on the ground for the BTC. So you don't notice that even the BTC market increased aggressively recently due to a lot of institutional investors. But of course, new trader, experienced trader, the risk management you need to maintain well, because as I mentioned, when more and more players enter the market, the risk should be a lot higher. So please aware of your risk management, especially when the crypto markets almost break out above the all-time high. So you need to more concerns on it. Please make sure maybe you can try to focus on the all-time high resistance level to receive further trading signal. Just a small update for the BTC market. Now we do have another 1 minute before we start our Nonfarm Payroll webinar. And if you guys have any questions, you can also feel free to type in the chat box while we are waiting for others. So let me see whether I can do another short analysis for you guys or not. Maybe the things that we can analyze should be on the oil markets. Overall oil market, you can notice is still maintained in the consolidate zone, but it's still advisable to expect the oil market might be consolidated in the range. Resistance level that you need to eye on should be 80.05, which is the recent high. Support level that you should eye on should be maintained on 78.25. Fundamentally, overall prospect for the oil are quite mixed. We do have certain fundamental, right, that can support oil price to go up. What is the fundamental that you can focus on? Should be maintained on the possibility of the Chinese economy recovery. So for oil trader, right, you need to try to understand the economics outlook from China. Why is it very important? It's because China can be considered as the one of the oil importer in the world, which means that China is the largest oil purchaser in the world. So if the Chinese economy recovery very, very good, then the chances for the people in China travel should be higher, demand for oil will be higher, lead to higher prices. And then we also do notice that recently we do have the OPEC meeting, and then OPEC member actually mentions that they will voluntarily cut their oil supplies by 1.3 million, if I'm not mistaken. So when supply is going to be cut by OPEC member, this can also lead up towards the oil prices. But of course, as for now, right, the Chinese economic recovery are not as good as expected. So this is the main reason that weigh down the appeal for the oil and then lead to the consolidate zone for the oil market. So if you want to trade for the oil, it's better and advisable for you to have some patience and wait until actually break out above the resistance or support level to enter the market. Okay, so now it's already on time to start our webinar. And then before we start, just a short risk disclaimer for you guys. So tonight's webinar is intended for educational and informational purpose only, and participants shall not take it as financial or investment advice, nor a trading signal. The accuracy and reliability of the information provided cannot be guaranteed. Q Prime and I hosting the sessions are not liable for any losses or damage resulting from the use of the information presented. Participants are responsible for independent verifying information and considering their own financial goals and risk tolerance. So this is just a short risk disclaimer before we start our webinar. Okay, so now we are going to start our webinar right now. For today's topic, we will talk about the long-awaited data, which is the Nonfarm payroll data, which is going to release later tonight. During the webinar, I will try to explain what is the Nonfarm payroll in the layman terms, especially for new trader. So for experienced trader, you can just maybe focus on the second part. In the second part, I will try to let people to understand whether in this week, the Nonfarm payroll their reading may be positive or negative, and then how can we analyze and predict the reading of the non-farm payroll. Then after we understand all the non-farm payroll and then the predictions of the non-farm payroll, next thing we will try to move towards on what kind of products that will be experience a significant movement, especially after the non-farm payroll data release. And then we will also do a short technical analysis to guide you guys on what can we do on TP level, the stop loss level, what you need to be careful on it. This is a brief explanation. Okay, so first part, understand the non-farm payroll. Second part, understand the data trends. Third part, understand the relationship after the non-farm payroll release. And then fourth part, we will try to let you guys update about after the NFP release, what can we focus next? Because NFP is not the final step for your trading journey, especially after one data release, one NFP data release, we will have more and more things to come out. For example, if data is very good, then the next thing that we need to eye on should be on the monetary policy statements from the central bank. So we will guide you after the NFP, what can you expect next, okay? So the first thing that we will talk about is decoding the non-farm payroll or the simple explanations of the non-farm payroll for new trader. So the non-farm payroll represent the comprehensive count of paid US workers across all business establishments, excluding general governments, employees, private households employees, employees of non-profit organizations, and farm employees. So to put in a very simple terms for the non-farm payroll, right? Okay, to put in a very simple term for the non-farm payroll are actually one of the major reading in the United States. Okay, major jobs data in the United States. If NFP data is very good, what can you expect next? And if NFP data is not as good as expected, what can you expect next? Okay, so the non-farm payroll, right, is the key thing that we must be eye on, and then you can notice. To put in simple terms, NFP equals to a crucial employment data in the United States. So if this is very good, then there will be chances for it to cause the dollar to go up and then the gold price to go down. So you need to be aware of it. So as for now, the non-farm payroll for last month, sorry, this is a short these words, but it's actually for last month. And for non-farm payroll in last month, right, February, economists are actually expecting the NFP should be provide a 198K of the increment, so which is lower than the previous expectations. So if we are going to comparing the forecast with the previous expectations, right, we can notice, right, economists are actually expecting there will be chances for the US economy outlook will become pessimistic. To put in a simple term is economists are actually expecting the NFP might be reduced due to rising uncertainty in the market. And then this is also the reason why this leads to a more significant sell-off for the dollar market, because they're expecting the NFP might be negative. So they react and trades earlier, even before the data release. So yeah, now as a trader, you need to compare on the actual reading and forecast. So after 2 hours, after 1.5 hours, the non-farm payroll data should be released. And then for trader, you can try to compare the actual reading as well as forecast. If the actual reading here is much higher than the forecast and even higher than the previous reading, then which means that the US jobs markets are very good. This will actually cause the dollar to increase aggressively and then lead to a slump in the gold market. But if the non-farm payroll reading are actually worse than the economist forecast and even the previous reading, then we can be expect there will be chances for the dollar to slump further. Gold price might be continued extend its gain. But of course, non-farm payroll data is just one of the crucial data that you can focus on it. You cannot also ignore others important data like unemployment rates, average hourly earnings. This is all three very important data. It's better for you to compare all of the data, see whether it's better than the market expectations or not before you enter the market. But sometimes, right, there will be chances that if the NFP reading suddenly very good, but unemployment rate is worse than expectations, then what can you do next? So you need to, after this data release, right, for example, and then the reading are very mixed, you cannot predict whether the dollar is going up or going down because This is what we call the mixed sentiment. But what can we do? What can we do is we can continue to eye on the crucial resistance level or the support level, especially for the dollar market. And then after the data release, you can see from the support or resistance level to determine what is the good trends. Why is the resistance and support level is very, very important? It's because global traders are actually using the resistance level and support level to do the trades. And then when after the data is mixed, and then if the dollar market break above the resistance level, it means that more and more, actually more investors are actually thinking that this data is good for the US economy. Even the reading is mixed, but we need to see on the global perspective. And then how can we see the global perspective? Is through any breakout above the resistance level or the support level. If, for example, the data is very, very good, and then dollar are actually rebound and then break above the resistance level of 103.05, it means that majority of investors are expecting NFP might be good, then the dollar trend will be going up. So when mixed reading, please make sure that you need to continue monitoring on resistance level and support level to understand the global perspective on it. Okay, so just a small brief update on the definitions of non-farm payroll. Then the next thing is we will try to analyze the previous data trends to understand whether the NFP is good or not. But of course, this is not a 100% predictions, but if you want to according to previous US data, you can notice that especially this is a jobs data. They have been filtered in. This is a recent US economics data. Then you can notice right recently, overall economics data from the US region are actually mixed. We do have several data that can support dollar go up and NFP better, but we also do have some data to support dollar go down in pessimistic economics outlook. And this is the overall data. But if we are only focused on the US jobs data, this is the historical US jobs data in the past 2 weeks. If we mainly focus on the jobs data, ignore others manufacturing data, for example, you can notice that overall past week, the US jobs data, the reading are actually become worse than the market expectations. So you can notice that SM manufacturing employment, right, they are actually declined from the previous reading of 47.1 to 45.9. This is one of the crucial US jobs data indicator also. And then GORTS is better than expectations, means more and more people are hiring in the US, but you can notice another predictions for the NFP. Indicator of predictions for the NFP is US ADP non-farm employment change. This is one of the crucial data. And then you can also notice this data, the reading actually only came in at 140K, which is also worse than the market expectation. The reading here is the lower the better. And then continuing jobless claim are actually worse than the market expectation also. This is the higher the worse because jobless claim means that those who are unemployed, right, they are going to claim from the government. So this is just a claimant for those who don't have any jobs from the government. The higher continuing jobless claim or the higher initial jobless claim, right, it means that more and more people are jobless. That's why they go and then claim from the government. So the reading, this is one of the crucial jobs data, are also showing the reading are not as good as expected. So now, if we are only according to previous US jobs data, we can be trying to expect that there will be chances for the non-farm payroll as well as unemployment rate data tonight might be provide a worse than expectation reading. But if you want to trade now, of course, the risks are very, very high. Sometimes, right, even you make all the historical predictions are right. This is all correct that US is not that good. But sometimes the data come out will be out of market expectations one. So you need to be aware of it, especially for new trader. Just a kindly reminder, during non-farm payroll, right, the market movement are significant, especially for the gold market. You need to extra be careful compare with the normal trading hour. You need to focus on it because you can also notice on the gold market, it's already keep increasing for periods of times already. Imagine if the NFP data suddenly better than the market expectations, very, very good. All of the US data is very, very good, then it will actually cause the trends for the gold to drop back. Okay, because it's already increased a lot and break out above the all-time high. So a lot of investors are actually eyeing on it. They try to understand whether any chances they can consider like do some trades on the retracement. And because if the data really very bad, the trend for the gold should be going lower, should be higher chance. But of course, you better for you to compare on all of the multiple data lah. Nonfarm payroll is just one of the crucial data. You don't forget the unemployment rate as well as the average earning plus bonus. This is a crucial day. And then because of this significant increment for the goal, it makes it more important. Anything that out of market expectations will trigger a significant volatility. So you need to more aware, especially for tonight's NFP. Previously, the movement are not as huge, could be not as huge. It's very big also, but I believe that maybe it's not that huge compared to now. Now should be bigger because gold are actually breaking record high already. Anything that happens will likely to trigger a significant movement. Previously, gold are still maybe break a small resistance level, break a small support level. It's not very important one, but as of now, gold is already break above the record high. Of course, you need to pay extra attention because everyone are focused on it. And then for tonight, the main catalyst for the gold market should be mainly on the US jobs data. Okay, so highly focus on it. For new trader, please aware that the risk should be very, very high tonight, and then better to consider a good risk management strategy. So after we explaining all the data, now we are trying to understand after the data release, right, what can we expect next? So for example, NFT is only today. Then after today, what can we do next? Okay, so in this month, in the March, we do have another important thing that we need to focus on it, which is what we call the monetary policy from the Federal Reserve. Because in March, the Federal Reserve member are actually going to decide on whether they want to cut their interest rates or maintain their interest rates. So they will normally use all this data to make the decisions. For example, if recently most of the US economics data is very, very good, then the Federal Reserve might be considered to cut their interest rates because inflations are too high. And then when any statement regarding of cutting interest rates will likely to trigger a significant downward trend for the dollar. And then if the Federal Reserve say they want to increase the rate, then dollar might be going up. So after the NFP data release, next thing is Federal Reserve statement that we must be eye on. And then just a very, very short, quick probability or expect forecast for whether the Federal Reserve is going to cut the interest rates or not. So now in 20th of the March, we do have the interest rate decisions already. And then as for now, according to CME Fed Watch 2, high chance that the Federal Reserve might be considered to maintain their interest rates. And then only few percent that people are expecting the Federal Reserve will be considered pause their interest rates. So this is a key thing that you must be eye on. If any statement regarding the Federal Reserve to consider to cut the interest rates, then the dollar will be dropped further. But if the Federal Reserve mentions they want to maintain or even increase interest rates, then dollar will be going up. So after the NFP things, what next things you need to do is you need to focus on the possibility of the interest rate decisions from the Federal Reserve. Okay, so this is all the short analysis for the non-farm payroll. And then to put a very, very short summary to you guys to explain about the non-farm payroll is, before we end the webinar, is the NFP is one of the crucial US jobs data. When a lot of investors will try to understand NFP if they want to trade on the US data and US dollar as well as the gold market. So if the NFP is very, very good, we can be expect that there will be chances for the dollar to go up because the job sector is good, economy recovery is good. And then if NFP is bad, then dollar might be going down. And not only NFP data you must be eye on, you need to eye on other crucial data as well, which what we call the unemployment rates is one of the important data. Average hourly earnings is also one of the important data that we can be eye on it. So you need to combine all of these data before you enter the market. Okay, so after you understand the data, right, next thing that you need to do is you need to try to understand what is the Federal Reserve going to do in future. So after all of these things you already understand, next thing that we can be move on should be on the technical analysis. Try to let you guys understand what is the all-time high. After the gold breaking up the all-time high, what to expect next. So here just a small guideline on how you draw the Fibonacci expansions, because you can notice, right, the gold market actually breaking the all-time high already. So we cannot find another resistance level. So what we do now is we click the insert button. This is the MT4 just for information. Hit the Fibonacci and then Fibonacci expansions. After you click right, the first dot that you can put on, then you can see that there are 3 dots one. Okay. So the first dot that you can put on should be on the, for example, this is the upward trend. You can see here. Here is the upward trend. But after they going up, right, where is the retracement? You can notice here should be the retracement. After they going up, the first retracement for the gold market. This should be your first dot. Then the second dot, right, should be the highest level of after the gold hitting. The highest level is better for you to focus on the candlestick body. And then the third level should be after they're going up, the retracement trends over here before they're going up again. So here should be the place for you to put your third level. So to put in a simple term is after we draw out, you can see that here is the first dot because this is the first retracement. Second dot is around here. Third dot is around here. So after you draw out, right, you can notice that currently gold is actually break out above the Fibonacci expansions already. Next target that we can be eye on is very, very high. It should be around 2,200 already. So this is could be our expected next resistance level because you cannot find all-time high already. So this resistance level that you need to more aware of it. Okay, and then if the support level for the gold according to Fibonacci expansion should be maintained on 2130. So you can notice on the gap here, it's very, very huge. So you see that here the movement should be already 500 pips. We can be expect after the NFP reading come out, right, the movement should be much higher. 500 go up, maybe 500 go down also, because the gap here is very, very huge. Compared to here, for example, if you trade here during the NFP, the gap here is just very, very small only. But as for now, you can see the gold price keep going up for a while. You can imagine if data is too good, gold price drop, where is your next support level? Next support level you can add on should be on 2130. It's very, very huge gap already. And then imagine what if it's even break below the support level, then next target should be on the Fibonacci 17.8%, 2080. So all of this movement is huge, very, very huge. And then this is why we mentioned that Nonfarm payroll for tonight, the movement should be bigger compared to the previous one because we do have a huge gap between the resistance level and then as well as the support level. Normally the data release, after the data release, they will try to touch the resistance and the support level one. So yeah, you need to extra be careful on it for the data tonight. So support level that can advise you guys should be maintained on 2130. Resistance level is 2215. It's huge. For the dollar market, if you are only according to the technical analysis, dollar are actually successfully break below a strong support level already around 103.05 around here. But what you need to be careful is whether this is a fake breakout or not. Because even though sometimes, right, even though it's already a very, very nice breakout, but because of certain fundamental news, here can be form a fake breakout and then suddenly rebound back. So now because the trend should be slower, because investors are trying to waiting for the Nonfarm payroll, you can be expecting dollar will be slow. But any chances that after the data release, dollar better than expectations, and then dollar successfully break above 103.05 here, then we can be expect it will be chances for it to continue go up, which lead to a drop in the gold market. Okay, just a kindly reminder, Nonfarm payroll, you not necessarily just need to trade on the gold market. You can also consider others cross currency pay, but they need dollar denominated. Dollar denominated means currency that have USD behind one. For example, GBP USD, EUR USD, this thing. So anything related to USD, you can trade during and after the NFP data release. Not necessarily only focus on gold. And just a kind of reminder, gold volatility should be high. If you don't love risk, then maybe you can take others cross currency as a consideration. Okay, so even though this is a very, very nice breakout, just a kind of reminder, you need to be careful on it. And then you can try to monitor on the dollar charts to predict others asset movement. For example, if dollar continue to continue to go down, then maybe GBP USD will go up because dollar is behind. Okay, so need to extra aware of it. And then please make sure you follow all of this data, 3 data. And Nonfarm payroll, unemployment rate, and average earning plus bonus. So this is all the important things that we need to eye on tonight. Okay, so now I'm going to open for Q&A sessions. Anything you guys want to ask me can also feel free to type in the chat box. I will try my best to answer you. And then while we are waiting for more questions here, you can also feel free to join our Telegram group. We much appreciate it. And then normally in this Telegram group, right, we will try to give you certain trading ideas, give you a small market updates every day. So just a very short, quick market recap that you can just scroll and then you can notice what happens on yesterday's market. You don't have to go through all the, for example, Bloomberg's website that you read through all of the things. So in our Telegram group, we will just give you a very short market insight. So you just read through and you're able to understand what's happened in yesterday's market. It should be more time saving for everyone, I guess. So please feel free to join our Telegram group. And then, yeah, now I'm going to open for Q&A sessions. And once again, thank you so much for supporting us for the PU Prime. Any question that you guys want to ask me? For example, any trading strategy that you want to know on others' products, not only dollar and gold, maybe others' product that you are interested, can also feel free to type in the chat box. And if the webinar are not very clear and you want me to explain more clearly, you can also type in the chat box. Okay, so any questions for tonight's webinar? If not, we are going to end our webinar now. All right, yeah. So I assume no questions for everyone. And then please note that for new trader, you need to be extra careful, especially for the NFP movement tonight. Because why am I keep mentioning this? Because I'm quite worried about all of the new trader, because you can see that when the gold break above all-time high, all the gap between the next support level, next resistance level is very, very huge. It means that the movement are quite huge. So no matter you are a new trader or the bad trade, experienced trader, right? You also need to more be careful on it. Okay. With the estimated NFP figure, do you expect gold prices of gold to go up or go down? If we are only going to according to the previous US jobs data, this is the reading that I've been showing you just now. This is predictions for the, this is historical data from the US in past 2 weeks. So if we are going to according to the jobs data, right, there will be chances for the NFP might be provide a worse than expectations reading, which lead to a drop in dollar and then cause the gold price to go up more. If we are only to focus on historical data, but of course the risk is very, very high, even though historical data are predict NFP will be bad, because you can see that the gold price already hit almost record high. Any bad things happen, right? Even the fundamental is good, but suddenly one fundamental come out is worse than market expectations, right? The drop for the gold should be very, very huge. So of course, even a lot of data supports gold might be going up, but you must be extra careful on it because it's already hit the record high. So it's advisable for you to have some patience for Lindy to wait after the data release and then try to monitor the movement first. If you really need my honest opinions, right, I would advise you don't trade during the NFP because it's quite unpredictable. Just enjoy the movement now, but you don't like put all of your money to trade with just one data. It's a long journey, long trading journey. So yeah, more careful on it. Please remember, don't all in to trade in just NFP data. You will be very, very worried about it. Somebody asked about the retracement. Does it normally go below or beyond the normal level? So normally, right, after data release, right, previous experience, right, they will actually go even beyond the support level one. Sometimes they will drop aggressively and then start to rebound back and then form a long shadow. This unpredictable one is very dangerous if you want to all in your money inside it. So sometimes it will break below again, then suddenly going up in just maybe 5 to 10 minutes and then retest on the support level around here and then see whether go up or go down. So yeah, we actually go beyond. And then as for now, I think the movement should be huge also. If all of the data are maybe better than expectations or worse than expectations, but if the reading are mixed, right, for example, NFP is good and employment rate is bad, they are mixed reading, right, then the movement should be slow. And what can you do is focus on the support and resistance level lor, to see what is the global investor thinking about it. Because support and resistance level, right, it's not just a line, it's a understanding of what global investors are thinking. Because for example, for gold, right, they don't have any intrinsic value one. It's mostly imaginations for their value, market perceptions. So support and resistance level, it just let you to understand what is the global investor thinking. Okay, so for example, gold suddenly break above the resistance level means a lot of investor, more of the investors are more confident towards gold and vice versa. Yeah. I hope I answered the question, and then more questions that you guys want to ask me. For Lindy also, I hope I answered your questions, and then one of the anonymous attendee also. Any more questions you guys want to ask me before the data release? All right, so I assume no questions already, and yeah, thank you everyone, and then you are welcome, Lindy. We are glad that we helped you guys. And then if no more questions, then we are going to end our sessions now. And feel free to join our Telegram group. Your support is our power. Yeah. And then you don't lose one because we will try to update a lot of latest news in the market. And if no questions, then we are going to end now. Thank you everyone for your time. And then good luck for your trading journey. And please remember, risk management is the key, especially for tonight's data. It might really have a significant volatilities in the market. All right. Thank you everyone for your time. Thank you so much.